Very welcome to SNS and today's seminar on social impact investment and financing for sustainable development. My name is Ilinca Benson and I am Deputy CEO here at SNS. And this seminar is organized within our new seminar series on sustainability issues, Samhällsbyggnad och hållbarhet, which is founded with support from the Government Research Council, Formas. And as you are very well aware of, the private sector is increasingly interested in engaging in investments aiming at social impact and in finding different ways to finance sustainable development. And there's a lot of innovation going on with new financial instruments such as green bond, social bond, and so-called blended finance. And these new instruments and modes of working are often creating through collaboration between different societal actors from different societal sectors. And at SNS, we have been bringing up different aspects of this topic recurrently during the last years. And I can highly recommend these two reports by Professor Lars Hultkrantz, which dig deep into the social investments projects made by the Swedish municipalities. And so there's a lot of passion, commitment, and also increasingly a lot of money in this sector or movement, as it's also called sometimes. But we find that there is also a need for structure, a common understanding, and systematic analysis. And we hope with this seminar to make a small contribution in that area. So today we will get an overview of the international sustainable development landscape and use it as a base for discussing the evolution of social investment, both internationally and more specifically here in Sweden. And Karen Wilson will start off by presenting the key findings from a recently published OECD report on the role of social impact investment in delivering the sustainability development goals. After that, we have Christopher Flensborg over there, Head of Climate and Sustainable Finance at SEB, who will comment on the report and also give his reflection on the social impact market. And finally, we will invite a panel up on stage with also Chief Investment Officer at Norrsken Foundation, Tove Larsson, and Hugo Mörse, Head of Leksell Social Ventures, and they will give, of course, their insights and reflections on this market. And then, of course, we also invite you in the audience to give your comments and ask questions and participate in the discussion. But now I would like to invite Karen up on the floor. And Karen is the team leader of social impact investment at the OECD and former senior fellow at Bruegel. And you have been with this OECD since 2009, and you have work has focused on innovation, entrepreneurship, and finance, and a lot on social impact. Yeah. Of course, and you're also an associate fellow at the Said Business School at Oxford. And also, very happily for us, visiting lecturer at Stockholm School of Economics in Riga. And you were here already in 2014 and presented your work that you did at the time for OECD on these topics. So we're very happy to have you back and learn more about what's happened in these last 5 years. So the floor is yours.
Thank you. Thank you very much. It's really a pleasure to be back. Thank you, SNS, for inviting me again. As mentioned, I came after our first report on social impact investment came out in 2015. And I have to say at that time, there wasn't a lot of development in the market here in Sweden. Everything was very fragmented. And over the years since then, it's been such a pleasure to see this groundswell of activity here and also the connection between the different players. So I really look forward to the discussion on the panel. So what I'm going to do is try very quickly because I know we have a lot of things to discuss today, to take you through the new report. I'm going to go very quickly, but the full report, which is 240 pages, will be made available to you For those of you that very wisely don't want to read the whole thing, you have the 20-page highlights, which I highly recommend. And for those of you that can't be bothered with 20 pages, we have the 2-page infographics. So we have something for everyone. Just a reminder, the 2015 publication was called Social Impact Investment Building the Evidence Base. In there, we had a chapter trying to define what do we mean by social impact investment? What are the boundaries? And we actually got a lot of pushback on that. People said, oh, the market's young, let 1,000 flowers bloom, which of course is tricky. And we'll get into that topic a little bit later in terms of if you don't define boundaries, how do you know what is really impact investing and what's not, and how do you avoid impact washing? Anyway, we also developed a market framework. We looked at the data issue. We started looking at policies at the time. Policies were relatively new. I think only less than 10 countries had policies at that time, and maybe there were a total of 20 policies. In the current report, we've mapped almost 600 policies in 45 countries. So, I mean, that's one of the indicators of growth of the market globally. So in the new report, we look at the state of impact investment globally, pull together some of the data that's out there. We also did workshops in different regions around the world, and we did case studies, and we pulled that information together. We also have the policy chapter and the data chapter. So let me try to take you through. All of this work has been framed under financing for sustainable development, because one of the other big changes since the last report came out is that the Sustainable Development Goals were adopted, and the accompanying financing for sustainable development agenda was also put in place. And what we realized at OECD, I've been leading the work on impact investing for many years, but we also have colleagues that are working on development finance, and they're out talking about blended finance. Then we have other colleagues working on green finance. And what we realized is there are a lot of similarities between these different things in terms of instruments, approaches, principles, a lot of things that we can learn from each other. But they are distinctly different at the same time. But one of the biggest differences are the communities around them. And these communities don't know each other, which is incredible. People in the green community aren't connected to the impact investment community, aren't connected to the development finance community. So that's something we've been working on at OECD through an annual event that we do. So in the first chapter of this report, we try to put impact investing in the context of the broader financing for sustainable development agenda. I see we have a participant from across the street watching from, that's funny. Now he's looking down at the floor. Sorry, I couldn't resist. That's the overflow. Okay. Okay, so this is the spectrum of capital. I know it's very detailed, and I know you all have seen a million different versions of the spectrum of capital. It's in the report, it's in the highlights. I won't go into detail. But as we all know, there really has been a movement towards an interest in investing for impact. And that movement is coming from, well, really started, I think, from the philanthropic side, from foundations and family offices that have been some of the leaders in the impact investing space in many countries. But it's also coming increasingly from institutional investors as well, that already over the last couple of decades have started focusing on not investing in bad things, so doing negative screening, onto ESG, responsible investment. And now a subset of these institutional investors also want to invest for a positive social or environmental impact. And I should say, when I say social, I mean both social and environmental. I mean social more broadly. So we see this spectrum of capital with more and more players coming from both sides. And I really do believe that in the future, especially when we can measure impact, measure outcomes more accurately and in a more comparable way, that investors will be able to come in and be anywhere they want to be on the spectrum, depending on their appetite for risk, return, financial return, and social return. Of course, we're a bit far away from that at the moment, but there's a lot of great work going on impact measurement, which I'll talk about at the end. So why is impact investing so important? And a lot of people think, well, it's about, getting private investors to come in, and we need more private money for the SDGs. To me, that's the last thing that's important. To me, the most important things are these three here. One is innovation. Impact investors are bringing new ways to address social and environmental issues more effectively, more efficiently. They're bringing new ideas, they're piloting, they're experimenting, they're taking the risk that the public sector often isn't willing to take. And if these approaches work, they can then be scaled up, of course, also in partnership with the public sector. So innovation is the first thing. The second thing is accountability, because implicit in saying that you're an impact investor is that you're actually having a positive impact and that you're measuring that impact. So it's getting not just impact investors, but it's getting all investors to think about how do they measure the positive and negative impact of their investments. And actually across OECD, our colleagues are increasingly interested about what this means. So it's helping impact investing is really helping to lead a movement, which is much broader than just impact investing. And I think that's really exciting. The other thing is it brings sustainability. So it used to be, especially social enterprises, they were living on grants. But now with these new investment models, you're encouraging social enterprise or profit with purpose organizations to have models that are sustainable, that actually work without having to live on grants year after year. So just a very quick overview about the market. And this is data. Of course, data is an issue. There is a lot of data in different countries, but it's not comparable across countries. At the moment, the most comparable sort of global data we have is from the annual Global Impact Investment Survey. It's not perfect, but it gives us a good indication of how the market is moving. Of course, it's only surveying a subset of the market. Institutional investors that call themselves impact investors, not all of them would pass the OECD definition, but that's okay. It gives us some data. And what we see is a couple of things. First of all, a lot of these investors are investing in sort of mainstream sectors, financial services, energy, microfinance, housing is starting to get into some of the more social issues. And this is something I want to pick up later. Again, you know, what really is an impact investor and where are these investors investing and are they really working on new solutions to some of these big social and environmental challenges? The good news is impact investing really started in the developed markets, but we can see increasingly more and more assets are being allocated to developing countries, which is great. And there's more and more interest to do so. Africa, there's a lot of, at least there's a lot of talk in Africa. I think there still needs to be more actual investment in Africa. Southeast Asia is really growing, and it's driven not only by foreign investors, but also by the local markets. And that's very important because if it's only driven by foreign investors, it's not sustainable. And Latin America is also growing. So also in the report, we have a chapter that updates our impact investment market framework from our earlier publication. I won't go into much detail about it, but just that it's, I mean, the impact investment market is the market. You have the supply side, you have the demand side, you have the important role that intermediaries play. We don't have enough intermediaries in the market in most countries around the world. The enabling environment, the role of policy plays a very important role, and I'll talk more about the policy chapter in a minute. But all of this is in the context of the social, environmental, and economic challenges that we're facing. So in the report, we have sub-chapters. We have a chapter on what we learned in the different regions. We have sub-chapters on all these regions here that you see, including a small sort of section on fragile states. We do a lot of work on OECD on investment in fragile states. Of course, it's tricky, but there are some impact investors that are out there trying to work on some of these really thorny issues. And as I mentioned, we also did a number of case studies. We did 30 case studies looking at social entrepreneurs or profit with purpose organizations that have gotten impact investment. And we tried to look at the lessons learned across sectors, across countries. I'll share some of those findings with you in a minute. And we also did those workshops. Okay, so here are the findings. So these are mostly from the case studies that we did. And again, I'm just going to pick out a couple of things on the slide because I know we don't have much time. But, often these entrepreneurs, they need some initial grant funding to get started, whether it's public or private. So whether it's from the government or from a foundation. Often they need some technical assistance also throughout the process or in different parts of the process. But also what we've seen as these enterprises grow, they have a mix of investors that are coming in. So they might have some philanthropic support in the beginning, and then they might get some impact investors, and then they might start getting some commercial investors. So, it's been really interesting to look at the mix of investors that are coming in. Also a mix of financing instruments, debt and equity, obviously, but also there are these pay-for-success models that are becoming increasingly important and increasingly applied, and I think we'll talk about that. Some of the speakers will talk about that a bit more later. Impact measurement remains the key challenge, and I'll pick up on that in a minute, the issue of data and how we can make sure we really have transparency in the market. And of course, the role of policy is important. This, and I'm not going to go into detail, but this is part of our OECD policy framework where we map out and group the different policy levers that countries can put in place. And basically, we have them in 4 different categories of what policymakers can do. I won't go into detail, but basically, policymakers can use these different buckets of tools to target different parts of the social impact investment market, whether the enabling environment, which is an obvious one, whether the supply side, the demand side, intermediaries. We've seen in a number of countries, the government helping to support these wholesale banks that serve as intermediaries. So there are a lot of examples in the report about the kind of policy. We actually have a mapping in the back of the chapter, which takes up about 20 pages in the report. So if you're really interested, you can take a look at that. So just a quick overview. Again, we mapped almost 600 policies in 45 countries, and we were looking at both domestic policies as well as policies for development cooperation. Because actually countries like Sweden, the UK, and others in Germany are very active in development cooperation, as you know. And they're actually already, in some countries, ahead of the game in terms of what they're doing in impact investing. So there's a lot that can be learned both domestically and from development cooperation. So this gives you a picture. The green bar are the domestic policies, and the orangish bar are the ones that are for development cooperation. You can see that most of the policies so far have been in Europe, but you can see really the growth in Asia. And this is all part of, there are a lot of reasons for that I don't have time to go into, but happy to talk about later. We also had a data initiative because we realized in the first phase of work, as I mentioned before, that there's a lot of data, but it's not comparable. So we were trying to bring together data aggregators so that we could get to some data standards. We still have a lot of work to do in that regard, but we're continuing this work. And there are different kinds of data that's important. We don't even have good transaction data about the activity level in the market. I mean, we have the GIN survey, but that's only one part of the market. So how can we have better data about how much activity is really taking place? That's something we're working on. The other thing is performance data, and performance data has 2 components. Financial performance, we know how to measure that. Of course, we have to get people to share the data because these are private investments, and that's tricky. But impact performance. And there is where it's a big challenge. How do you measure impact? And also, how do you make those measures comparable? Because impact is different across sectors and different contexts. So this is a meaty issue. So we, in addition to the work that we're doing at OECD on impact measurement, with colleagues from across OECD that are experts in finance, environment, employment, labor, social affairs, etc. We're really trying to tap into the best thinking in OECD about how we think about and measure impact. We also have become part of this impact management project structured network in partnership with about 10 to 12 other standard setting types of organizations, including the IFC, the UNDP, the Global Impact Investment Network, the Global, well, I'll talk about that in a minute, the World Benchmarking Alliance, GRI, PRI, etc. Probably a bunch of acronyms to many of you, but these are organizations that have really been working on impact measurement standards for either companies, investors, for us, and for UNDP. It's really for policymakers. So we're all trying to collaborate to bring the work that we're doing, but also to really push the envelope by collaborating together and trying to move ahead and develop standards for impact measurement and management. It's a 3-year project, and a lot of really great people involved, a lot of experts from different universities around the world as well. So in conclusion, the title of the report is The Impact Imperative for Sustainable Development. And the reason why we called it that is because we really believe there needs to be an impact imperative, and not just for impact investing, but for financing sustainable development more broadly. Because what we see in the work that we're doing at OECD, first of all, we see that financing is not always going where it's most needed. I mean, it's going, and this is financing that's saying it's targeting impact or sustainable development. And it's going to the usual suspects. It's going to more mainstream industries. It's going to the more developed countries. It's not going to the harder cases. And you can say, okay, well, that's fine, because especially for impact investors, they want to have a return. And you could also say, well, that's fine because this is a new market and we need to see which instruments and approaches and policies work. But at the end of the day, if you're promising you're going to have a certain impact, you need to make sure you're having that impact. And you could be having it in these more developed countries, in these more developed sectors. But as the market matures, we need to start moving into some of these more difficult areas and developing the business case and the business models and the financing models also in these areas. The other thing is innovation. Again, it's not just throwing more money at the existing approaches. That's not going to get us there. We know that a lot of the current approaches to addressing social, environmental, economic challenges, they don't work, or they don't work as well as they could. But there's no incentive for change. You know, the public sector is very risk averse. And so the opportunity here is that the private sector is coming in, innovating, experimenting, and then these things can be scaled up. But at the core is innovation. And if we lose that, if it's just connecting the money into the market, we've lost the game. And we're never going to reach the SDGs. Because if we don't change the approaches and make them more efficient and more effective, we're not going to reach the SDGs or the broader challenges that we're facing, although I think the SDGs covers just about everything in the kitchen sink. Data, I already mentioned the data challenges. I won't go into that again. And then policy. So policy can play a very important role. The market is driven by the private sector, but the public sector can play a role in terms of the enabling environment and also helping support the market in these different ways, whether it's through funding research, whether it's through supporting networking between players, whether it's through helping support intermediaries, the development of intermediaries, whether it's providing funding. And again, we talk about that in the policy chapter. So we really are sort of pushing on all 4 fronts about the financing itself and where it's going, about innovation and making sure there's innovation in the market, making sure that people are really measuring the impact and working with leading organizations to try to push this ball forward, and then advising our members who are policymakers about what they can do to help move the market forward. So with that, I think I'll wrap up. I hope I didn't go over time. No. You didn't stand up yet, so I think I'm okay. Thank you.
So, thank you very much. And Karen, please stay on stage. We have time before Christopher. I will leave the Christopher. If anybody has some questions right now on the report for Karen. Otherwise, we can take them. But if there's some unclarities or so, yes. And you put on your mic.
Yes. Hi. Karen, just a quick question on you had the geographical map up where we looked at the statistics between domestic versus sort of development, co-op, impact investment, initiative, policies, etc. Is there a reflection from your end why we're seeing such a heavy trend on the domestic side I mean, spontaneously, I would have thought, seeing this developed, especially for a country like Sweden, where we do so much kind of international, development work, that's where we would have seen this innovation really, be trialed and therefore be established primarily. But it seems that we're doing it more on the domestic side.
I would say in Sweden it might be, I mean, can I get the slides back up for a second? Those numbers were aggregated, but in Sweden it's the other way around. I mean, the activity for development cooperation has been much more active than domestically for the moment, but that's changing. But there's a history in Sweden of development cooperation. Same in Germany, same in the UK, Canada. It's a handful of countries, but it's really growing. Not so much in Asia at the moment, but Australia is starting to get involved. But there is a lot that can be learned on both sides from what's being done in development cooperation. But I think more what we're going to see in the future, because there's a lot of activity domestically, is that the domestic market will help inform development cooperation and help countries think about what they can do. I'm speaking at an event in Spain later in the month, and they're trying to figure out what they can do in development cooperation in this area. They haven't done anything, as far as I know so far, or very little. They're starting to do a lot more domestically, and they're using that to help inform. So it works both ways, which I think is really important. And the other thing, which I forgot to mention, is this global steering group for impact investment. How many people have heard about this global steering group? So it's this global initiative, that came out of the a G8 summit, a then G8 back in 2013 in the UK, and they've set up national advisory boards in different countries around the world. There are now 20 countries that are involved. And this is also another mechanism for sharing learnings and developments in different markets across countries. And I know there's a movement in Sweden to try to develop a national advisory board here. We had a meeting this morning, very productive meeting. So
thank you very much, and we will continue the discussion. So Christopher Flensborg, Head of Climate and Sustainable Finance at the SEB, and you have had a long career in banking and dedicated a lot of it to develop in different mechanisms and instruments to sort of make it easier for mainstream investors to invest in sustainability, more or less. And one of those things is the green bond issued by the World Bank in 2008. So we're very happy to hear you.
Thank you very much. First of all, I want to congratulate you with a great report. I'll recommend the 20-pager though. Sorry, but I think it's great that you're doing this work, and I think it's a very, very good outcome. I'm going to make a little review on this, and to do that, it's important to understand my background. As you mentioned, I'm a banker. I'm an investment banker. I'm actually a full-blooded investment banker, meaning that I'm looking at the basis points. And when you're looking at a banker, it's important to understand the mandate we have. The mandate we have, that's the money you're putting into the bank or your pension funds or funds in general, and creating a high return for that. That means that you basically rely on that we are securing you a high pension, meaning that everything we have to do, that is to look at the performance. Now, looking at sustainability obviously means that is not excluded that you can create a high return. However, looking at the mandate of a banker, it means that you need to combine the return with the sustainability angle. And that's from that view I will make my comments. So looking at money, looking at capital, it's quite easy. Capital will always flow where the perceived highest return, risk-adjusted return is. So for a Swedish investor, the exposure is to inflation in Sweden, meaning that will be an element in investments, meaning that there will always be an element of local presence in the investment policies alongside searching the highest risk-adjusted return. And that is not always going hand in hand with the highest need or the most needed investment of capital. And one of the issues we're seeing that is the scalability. So to create a high return, we have been reducing our cost. We have been streamlining our organizations, and we have been creating silos. And that means that there's very little communication between different mandates inside organizations. And the sustainability mandate is often a political one. So you will have CSR groups which are doing that, and you have investment portfolio managers that's there to secure the highest possible return. And unless there's a dialogue created between those people, we will never arrive at sustainable finance. Sustainable finance is when you combine that. Now, to get there, you need to start with the challenge. You need to understand the challenge. You need to understand how this challenge is actually combined with the financial return. And the challenge is quite straightforward. We're seeing a consumption, we're seeing a livelihood that's not sustainable. So the way we consumed yesterday was wrong. We have too high consumption, we have too high resource consumption, we have too much pollution, we have instability being created by that. We also have segregation of societies. And these things are unsustainable. That means that for us to actually embrace tomorrow, which is not only consumption for yesterday, but 1 billion Chinese and 1 billion Indians and an increase of population of 30%, we need to change the way we consume. Our corporate clients, our societies are having the solutions. We need to talk together and we need to combine that with finance. That is what sustainable finance is about. Finding ways of supporting these people that have the solutions for tomorrow. That means we need to find the angle where we combine finance with the society pattern. It's quite easy in green. It's quite easy in the environment. We know that CO2 is basically a result of consumption. Consumption is a result of using resources that cost money. If we can reduce the pollution, we can also reduce the consumption, and that means we can save money. That's finance. Now, going into the rest of the SDGs, the sustainable or the social matters, it's much more difficult. What happens when we are supporting the health system? What happens with my investment? How does that benefit from that social investment? And that's our role as finance to actually go in and identify that. Now, in my role, the mandate I've been given by the bank, I have 10 people working on identifying these challenges and finding out how finance is actually playing a role in creating better societies. And I'll give you a couple of examples because that's basically addressing some of the psychology barriers or mandate barriers which are illustrated in your report. So one part is the additionality. So additionality is a buzzword, but it has a different opinion in different societies. So for us, additionality at the first place, looking at finance, is to mobilize finance. So before we can create lower pollution, before we can create more social engagement, we need to understand what this is about, and we need to activate our infrastructure to deal with this. That means the most important additionality we can create in finance, that is to mobilize the financial industry and the people working in the financial industry. That's the core. Examples of doing that is green bonds, which is actually not creating reduction of pollution, but it is creating a dialogue between different players in the society, and thereby it enable, using another one of your work, it's enabling the financial industry to understand the challenges which we're facing and slowly engage. So I think that mobilization of the financial industry, the enabling factor, which is about education and creating infrastructure, is a key factor. And the easiest way to address that is to create beta products, so replication products like green bonds, which are basically allowing finance to engage without having a different risk profile. So that's one comment. That is also addressing another issue, and that is about merging societies, which you're talking about. So we need to create a much broader dialogue. This is not about finance and societies, this is about integrated societies. So to give you an example of that, we have been working over the last, 18 months, Mats, in basically addressing social issues there you are. So addressing social issues in Sweden. So we all know that we have car fires and we have a lot of crimes in certain areas around the big cities. And that's a challenge we don't only have in Sweden, that's one we have across Europe. This is not only a reflection of migrants coming into the Swedish society, this is a reflection of the way that we have segregated our societies. Young and old, employed, unemployed, urban, rural, migrants versus locals. And that is unsustainable. And what we have identified that is that if we can work with property companies and cities in creating a more integrated society, we can not only create social wealth, we can actually create financial wealth as well. So properties in rundown areas tend to lose value. Properties in growing areas or in inclusive areas tend to increase in value. So if we as finance can understand what is required to convert bad areas to good areas, we can actually help our clients, the property companies, societies, the municipalities, to create social and economic wealth. That's the role of finance. That's sustainable finance in our world. That's about creating dialogue and using our experience in finance to identify these challenges. Now, speaking to our clients, and I see many of our clients in here, and I see different mandates. One of the challenges we're seeing that is the segregation in mandates, which we have in our bank as well. So one is having the CSR mandate, another one is having the policy mandate, and third one is having the financial mandate. And it's extremely important that we bridge those, that we help the CSR officers to understand what is required to activate the financial mandate, to make the financial mandates to understand what value that can be contributed by the CSR mandates, and thereby empower the political mandates to actually create a turnaround. And I think that what we're seeing in Sweden, that is a leadership in doing that. I'm extremely proud. I'm a Dane. I'm extremely proud of being representing this society, because what Sweden have, which only a very, very few societies having, that is that it have an appreciation inside the companies of actually engaging in societies. So there's no difference with individuals. So we all, whatever we are, French or Americans or Chinese or Swedes or Danes, we all want to create better societies. But what is different here, that is it's actually appreciated when you create your business models. And I'm proud of the investors which are driving this, and I'm proud of my institution, many other institutions, which are actually supporting this as well. That's what we can share with the rest of the world. That's where we can actually go in and make a difference. We're doing that already, we can do that much more. Now, going into to how this can be used in innovation. So you talked about innovation as well. We don't think that innovation has to be difficult. When you look into capital, it's extremely conservative. So we need to be very careful when we're moving forward. What we have been doing, that is that we have been creating strategies where we're using tools which we already know. To give you an example, one of the biggest challenges we're facing over the next decade, and I'm okay on time, right? I have 2 minutes? I'll take 3. One of the biggest challenges we're facing, that is the destabilization of ice systems. So one of the biggest one you have, that is the Himalayan mountains. So you have like the ice, the glaciers of the Himalayas is supplying 1.3 billion people with their daily water. So it's going down to Pakistan, India, Bangladesh, China, and a number of other countries. So 1.3 billion people get their water from there. What is happening right now, that is that water is melting, and that means that we are going to see a destabilization in that area. It's not even a question, it's going to happen. And what happens when you don't have water supply, that is that you get war. When you have war, you get migration. So this is not a local problem, it's a global problem. And that means that companies that want to be active in that region and people that want to address migration might want to look in that direction. So what can we do without actually taking too big risk? And we've been working a lot around that. We have created a strategy where we're using our experience from microfinance. So ECB is indirectly having more than 20 million clients in developing countries, where we're lending money out to microfinance on behalf of our clients, our investors. We've been using that to expand it and are now capable of actually going in addressing the water issues in Himalaya. So we created a strategy where we use the green to create a quality assurance for that we're addressing the red issues, and we're using our experience from the microfinance to understand credits in that area. And that's what innovation is about for us. It's not about creating totally new systems. It's about creating systems where we understand the risk and we understand the purpose and combining them in new ways. And I think that is something that I will highly encourage the OECD and your partners in investigating, because I think this is the way forward. So I don't want to take more time, but we're going to have a panel. Yes. So thank you.
Thank you very much, Christopher. And please take a seat over there. Please, Karen, back on stage, and Tove and Hugo as well. And Tove Larsson is Chief Investment Officer at Norrsken Foundation. And the Norrsken Foundation, as you might know, is founded by Niklas Adalbert, one of the Klarna founders. And you invest in startups with scalable business ideas addressing a variety of social and environmental world problems. And one of your goals is to create so-called impact unicorns. So I'm very interested in hearing more about that. And Hugo Mörse, head of Leksell Social Ventures, which is a non-profit investment company founded by Leksell, founder of Elekta. And you focus on investing in initiatives that address social and economic marginalization in Sweden, if I understand correctly. And you were financing the first social impact bond or social outcome contract in Sweden, in Norrsken County. So I'm very interested in hearing more about that. And now I would like to start by hearing from Tove, both how you work at Norrsken and also, of course, your reflection on the previous speakers, please.
Absolutely, yeah. So as you already heard in the introduction here, but basically, Norrsken, we believe that entrepreneurs and tech are some of the most important pieces of the puzzle to find these new solutions that have already been discussed, to find the innovation that is needed to actually address the global challenges that we see around us in a new way. And our thought is to contribute to that by creating or strengthening the ecosystem around these entrepreneurs that all have the common vision to make the world a better place using technology. And the way we do that today is, first of all, to have an Impact Tech Hub here in Stockholm, where we host 350 members from 120 different companies, all working in different ways then to achieve this positive impact. And the other part which we're going to focus more on today is the impact investing activities that we do. And we're looking for early stage VC investments, but where the impact is our first lens. Basically a super interesting report, so thank you so much for that. And we were not around in the first version of the report, so that was also really interesting to see sort of how it has been developed over time. I think a couple of key takeaways from me is, first of all, the importance of the data. How can we measure and communicate what we do? And that's going to be more and more important. And I think also what you mentioned about the importance of innovation, that what we can bring to the table is maybe not first and foremost the capital, but really to bring these new solutions into the space. That's a couple of key things.
Oh, just interesting. How do you do when you assess project before invest? And then do you have some kind of criteria on specific areas or domestic or global? Could you say something about that?
Absolutely. So, as I said, impact is our first lens, and I think I'll focus mostly on the impact assessment in this context. And first of all, we ask ourselves, like, what is the world that this business is trying to create? What would the world look like if they succeed? Second of all, what is the challenge? So why doesn't the world look like that today? And what is this specific solution trying to achieve? And is this the best solution out there trying to achieve this goal? And I mean, we are new on this market, and we're trying to learn as much as possible from what's already around in terms of impact measurement systems. And we're focusing on the sort of what is the long-term impact, but also trying to identify the shorter-term indicators, such as the output and the outcome dimensions. And this is something that we also put into all our investment agreements. So with every investment we make, we put into the agreement that we commit to together and define these metrics and to track them over time. So we get quarterly reports from all our investments looking at these specific investment KPIs that we have defined together.
And how is your risk appetite, as Karen was pointing out, some kind of spectrum? Where are you in that spectrum?
Yeah. I mean, so we are a VC fund, which means that we are high risk, early stage, and that I would say goes for both the impact and the financial side. We need to bet on the solutions that we think can have a strong impact and a strong return, and that will mean that we'll have to take risk. Yeah.
Thank you. Hugo, tell us more about Leksell Social Ventures.
Absolutely. Thank you so much for having us here. And Karen, thank you for your report. And Christopher, also thank you for your comments. And you as well, Tove. Leksell Social Venture is, as mentioned by Ilinca, is an investment company that really looks at supporting social entrepreneurship and social innovation in different forms and in different shapes. And I think we have a slightly more flexible mandate. Christopher, you spoke about mandate than many other actors, which puts us in a really interesting spot, meaning that we can deal with the type of investment that Tove would do, for example, at Norrsken, but also look at and experiment with other types of structural financing models. In Ilinca, you mentioned the social impact bond in Norrköping municipality that we did. So I think that gives us a sort of a slightly wider toolbox, and we often try to look at the wider environment and see where do we see roles for sort of social entrepreneurship, and in those we might do direct investments, but also where do we see the potential for other types of structural contracts. And I think just a quick comment on the previous discussions. I think both Christopher and Karen sort of spoke about the role of the public sector and how do we define sustainable finance. And I think in to me and to Leksell Social Venture in the Swedish context, which is where we operate, we see this sustainable finance as really a shift from reactively dealing with costs in terms of social services. So people who get ill and sick and who end up in hospital or in prison or are being marginalized, etc. That's really a cost for us as a society and for you all as individuals. And looking at that and seeing how can we change that by preemptively creating value instead. So if you're really generalizing, it's a basic equation where either you can have people who are not integrated on the labor market and therefore they need benefits, healthcare, maybe they become criminals, who knows, a cost for society, or preemptively you invest in these people and you get them onto the labor market, and not only do you get rid of the cost for society, but also through tax, etc., you actually create more value. So I think that was a really good point by Christopher, and I think also it links then, Karen, to your point that if we want to do this in Sweden, who is providing the social services in Sweden? It's the public sector to a large extent. And we, through our historical legacy, we have more than many other countries a welfare structure, and it might not be as strong today as it was, sort of 20, 30, 40 years ago, but it's still there. And I think therefore it's important to notice that the public sector is a key actor in this. And usually when we're dealing with and when we're participating in events and discussions like this, like today, there's a couple of representatives here, and we tend to all, one way or another, either be from the private sort of capital side or in some instances from other institutional organizations, but usually there is also a lack of participants from the public sector. So I think that's also key to keep in mind, that they need to be part of that discussion.
So who would you like to see here on the stage next time?
So I think, if I sort of dream ahead of what Karen, you said the Swedish market had really sort of developed, and I think that's great. And I think there's a lot of momentum at the movement, sort of at the moment. But I think what I'm hoping that we'll see is that we will see, national strategies being not only developed by people who are on the stage like this, but also together with representatives from different relevant ministries, but also looking at some of the governmental initiatives like Tillväxtverket, Some Invest, etc., etc. There's a couple of actors who definitely have an interest in this, but I think by nature they might be a bit more hesitant. So I think it's about, for us, together with them, to create an environment where people constructively can come to the table.
Karen, would you like to pick up on that? I mean, we spoke about this morning, and also maybe touch upon what Christopher and Tove said.
Yeah, so first of all, I think this point about systemic change is really important. I mean, it's not about creating small solutions in the margins. It's really about how can you change systems to do things more effectively and efficiently. Because at the moment, a lot of people think, well, this is some cute little niche thing. As long as it stays a niche thing, it's never going to really have an impact. But if we start looking at things in different ways, which the pay for success instruments have helped us do, like the ones that you mentioned, social impact bonds, other pay for success instruments, where you're thinking about the problem differently. You're thinking about, well, how do you work on prevention as opposed to all of the problems once the problem's occurred. And that helps you get at the systemic change, and you can save costs, you can do things more efficiently, you can do things more effectively, which gets to some of the things that you were saying. I mean, we need to have different ways, different systemic solutions. It's not about these small things on the edges. The other thing is engaging with the private sector. It's tricky, one, because in many countries they're not so aware of this market. Two, when they hear about it, they think, well, that's sort of a thing on the side. And the thing is, it actually cuts across many different ministries. We've even had troubles within OECD trying to figure out where this fits. When I started the work, I was in the Science, Technology, Innovation Directorate doing work on venture capital, angel investment, entrepreneurship, innovation. And then I got into this topic. And the report came out, and they said, well, this was great, but where does it belong? Should it be in the finance directorate? Should it be, and I ended up in the development cooperation directorate because we were focusing on the developing countries. Actually, now I've just moved to the Secretary General's office because they want to integrate this across everything we're doing at OECD. But the problem is, which policymaker do you go to? And that's really a challenge. And then I understand in Sweden a lot is happening at the regional level. So you want the national governments, you also need the regional governments, and then how and when do you communicate and connect? But I think you talked about the process of dialogue and engagement. That's really important on all levels with investors, because you have all types of investors. You have the more flexible ones like you all that can come in and do lots of things. You have institutional investors that are deploying a lot more money. However, you have all your the constraints and the mindsets and the requirements, the mandates from the clients. But how do you bring people along on the journey? And step by step, and I agree with you, your point about innovation. It should never be innovation for innovation's sake. It should really be, how can you build upon what's there? And incremental innovation can be a lot more powerful than radical innovation.
I would like to open up the...
Maybe I can just add on to one of the points you're saying. So the advantage of involving the private sector. So we have been heavily engaged on the front and on the business side in this over the last 10 years. And I think we have activated deployment of more than 2.5 million euros in research for sustainable development. And that's money which you will never find in the CSR department.
Yeah.
How do you do that? Could you be more, give some concrete examples?
So basically, my group have been in charge of doing green bonds in SEB. SEB have been advising issuers which represent roughly 18% of the global market in green bonds, which is now $570 billion. So we have been very active. We have done a lot of business. We have been advising Canadian issuers, Ontario and Quebec. We have been advising China, and many, many others. That's obvious we earn money on that. And that's money which we normally didn't earn. And that means that we can use some of that money to reinvest in innovation. So to give an example, I talked about social segregation or segregation in general. We had no research in Europe basically mapping the universe of segregation in Europe. And inside a specific area, we paid 2 universities to actually create a research across Europe, creating a benchmark so we understood the nature of different systems. We were surprised that there was no such research in the EU or at the OECD, but basically we were between the chairs, so there was no interest in identifying that financial mandate. You wanted to understand the additionality and all the numbers on inclusion and so on, but there was no link to finance. And that's the way that whenever we can earn money on it, that we can actually re-engage and pay for that kind of development. And we're not alone there. We have a number of competitors or colleagues, or whatever you want to call it, that can do exactly the same. And I think that's important to understand.
How do you, you said it yourself, competitors or colleagues. How is this a competitive market or is it more cooperating? How do you find yourself? You're 2 players in this field, for example. How do the players interact with each other?
In Sweden and in the Nordic, I would say it's very cooperative. We've been in touch with a lot of different players from different groups that you mentioned also earlier. And I think everyone has a very positive approach and want to help each other out on this because it concerns all of us.
And I think it's broader than concerning all of us. I think it's also, in Sweden at the moment, is as we've said, it's about building a market, creating a change in the system to really put the emphasis on impact, not by saying that because that sounds like a buzz phrase, by actually coming up with new approaches. For example, things like social outcome contracts, where if you don't get the impact, you don't get paid. Therefore, it's very simple. Impact is first. And what are the benefits from that? And Christoph, you talked about how can we demonstrate the long-term economic value from social impact. And I think they're working together with all the actors, you can also then be able to get the bigger players, like I know we have some of the bigger institutions here in the room, for example, to encourage them to also say, okay, others are piloting this, trying it out. Will we be willing to potentially, even if we have a tighter mandate, can we potentially sort of really also participate in some of the newer approaches, which really physically puts impact in the first room, but still generates economic and financial value.
I would just like to open the floor for questions. So if you have any question, please raise your hand and wait for a microphone. And Karen will give a comment first, and then there will be the question. So please.
Yeah, I just wanted to build on what you were saying. Inherent in that, more and more people are talking about impact. And we talk in the report about the danger of impact washing. And I was
Could you say a bit what is impact washing?
When people are saying they're going to have an impact, but they don't then measure, and who knows if they really do. Or if you say you want to have an impact, I was talking to someone yesterday, it can then turn off investors thinking, oh, okay, they're not serious about investment. So we have to be careful about the word, and we have to be very clear about the evidence, demonstrating the kinds of products and approaches that are working, and being able to measure the results of some of these investments. That's the way to move the market forward. If we talk more about impact, that's going to hurt the market.
I will attack that a little bit.
Good, please.
And it's not because I disagree. Of course, there should be an impact. But what we have experienced is that our clients actually, so we're a bank, we have like more than 5 million clients. And those clients are experts in their field. So a building company would always know more about buildings than we do. And to activate their engineers and their environmental experts in creating a value contribution for properties, we would normally trust them and get that verified to make sure that we've done our homework. However, there's 2 parts into this. So they will make a promise on what they're doing, and they will report on that. And for us, the most important is disclosure on the promise and the reporting, and then having a verification. That means that our investors can assess whether this is done the right way or not. And at the second way, you start using the term impact, and then you define what impact means, then you're basically closing a lot of opportunities for dialogue, which would be a shame. So one caution I would have in using the word impact, that it shouldn't close the dialogue and the inclusion of a transition. And then we both agree that impact is extremely important, but the term impact need to be flexible in one way or the other.
I think we're agreeing.
So let's have a question over here. Please say who you are and where you come from.
Marcus Svedberg from AP4, one of the pension funds. Thanks for interesting comments. As some of you mentioned, different investors have different mandates and different risk appetites and so on. Are there any ideas of some of these more innovative financial structures, payment for results or VC investments and so on? Any ideas how to scale those so they become available for larger investors? And the second thought, payment for results I think is very innovative. I've heard about the Norrsken solution. Any ideas around the opposite, basically creating financial instruments or bonds, cutting costs or avoiding future costs, which would be very interesting to address the climate mitigation problem? Thanks.
Okay, so scalability was the first question. Anybody who wants to pick up on that?
I mean, I can just give a quick comment on scalability on maybe the slightly more innovative structural models, and then I'll leave maybe for you, Tove, to talk about the VC field. I think we need to acknowledge that different players have different mandates, right? I mean, I think there's a reason why bigger pension funds, etc., are not at the moment throwing their money at social impact bonds, etc., because we are still developing the markets, we're still piloting the models and the tools. However, I think there needs to be a dialogue, and I think one of the key lessons for us in terms of systemic change building a market from the Norrsken case that we did was that we saw, as the sole investor, we didn't manage to really put in enough critical mass in terms of time and capital. So I think if these models are to be successful, we need to talk about scale. We need to scale them. So there's not really an option there. So I think it's about meeting somewhere halfway. And I think this is where the dialogue that Christopher was also mentioning is really important. I think players with flexible mandate like ourselves, we can do the pilots, we can try that out. But then there needs to be a conversation. And again, it's not only investment companies and institutions, but it's also government parts to make sure that it's a transparent and sort of trusted conversation, if you like, where we can identify the steps where other players can come in and sort of take over the leap, so to say. And then personally, I think from experience on the Swedish market, private investors, family offices, etc., are quite willing. They have a risk appetite often, and they're willing to invest in models like this. The institutions, for good reasons, don't really have that appetite. I think what might bridge that appetite is government backing, being part of
Okay.
the dialogue, but also backing and taking a co-funding role. And I think that is something that perhaps can help to bridge that.
So Tove, you must be all about scalability since you
Yes,
want to create
yeah.
this impact unicorn.
Absolutely. Yeah. So, I mean, if we talk about maybe the scalability of this investment structure, I mean, we are focused on early stage, and it's a small fund, but we're already seeing a bunch of other alternatives in the market. And just the other week, there was another fund launched with impact focus and much more focused on later stage investments, which I think could be very interesting. So I'm hoping to see that. I mean, we're still quite early on in Sweden or in the Nordics in this field, but I'm really hoping to see this field mature and to see more bigger later stage fund that hopefully will be of interest for you. So I'm sure the opportunities will come.
Christopher, would you like to comment maybe on scalability, but also on the other question about innovation cutting costs?
So basically, I think that scalability will be solved. It's a matter of time. We need to understand it, and then we will create vehicles which can aggregate. So it will come. I don't see that as a issue. Expect from a time issue. So it will arrive. On the other issue in respect to cost, I think a lot of what we're doing is to create awareness around this transition and about the risk of this transition. And a big part of the risk in this transition is management or governance of institutions. And I think that the nature of questions you will see being raised by investors like yourself to companies both active and not active in sustainable finance, when they need capital, will change. And I think that people that will not integrate an integrated transition strategy and managing that will be penalized. So I think will be implemented in the overall kind of you saw it with coal a couple of years ago, and I think that's just the beginning.
So we have a question over here.
Thank you. Hi, I'm Thomas Bokström, and I work at RISE Research Institute of Sweden, where I lead something called the Social and Health Impact Center. And I've been involved in social investment and also working together with Hugo and others, colleagues on the social outcomes contract and so on. So one reflection around this ecosystem, which I think we are talking about, is that one key, I think, at least, is that we have different perspectives here. So for some, maybe for investors, this is more a financial model. For the public sector, or for me, this is more that we're also into that the system change model, or a model for driving change towards prevention, for instance. But then we also need to find some common ground. We have to have some similar views. So something that I'm thinking about is, to what extent should we use these differences between different perspectives in order to drive change, and to what extent do we need to align everything? Because I think there's also a danger in if we're just pretending that everyone has the same incentives for doing everything, which I guess it could be fair to just acknowledge that different stakeholders have different incentives, and let's use them to get as much impact as possible. So I wonder,
Karen, would you like to start commenting on that?
Sure, and I think that's the value of these national advisory boards that we've seen in different countries that have been set up through this Global Steering Group initiative. And it brings together different stakeholders that have different objectives, et cetera, that maybe normally wouldn't come together to talk, and to better understand each other's expectations and to build the ecosystem that's needed, and to understand what's needed in the local ecosystem. I think, one of the big issues when this whole global initiative started, the UK was the more advanced country in impact investing. And they thought, well, we can export this around the world. That's how it started. And they had a rude awakening when they got to Germany with a strong welfare state. And I mean, as soon as they crossed the channel, they every country has a different mix and needs a different type of ecosystem. There's no cookie cutter solution. But the important thing is bringing the key players together and having a dialogue and figuring out what works in the national context.
So what is scalable here? I mean, are the interventions scalable, or is the sort of system model for working together scalable? I mean, it's really different if some, like the intervention you're doing or financing in Norrköping, it's a very specific way of coaching teenagers. is that the thing that is scalable, or is more like you being financier and the municipality? There are different scalability components here. I would like you to elaborate a bit on that.
I think the most important thing is scaling the solutions. It's not about
the
scaling
interventions.
organizations or scaling the finance. It's really identifying the solutions that are working and scaling them up. And that can be done either domestically with some of the pilots and working. I agree that the public sector has to be involved in the scaling. But it can also be learning from other countries about models that have worked there. So there are many ways to scale, but it should be about the solution. It shouldn't be about the individual organization or the individual product or something.
And I would just quickly just add to that. I think you're right, Karen. It's the intervention that we want to get to, because that's what's creating the impact. But I think in Sweden's case, we also, like in Norrköping, for example, we think of the intervention and we say, great, that needs to be scaled and picked up.
Was it successful?
If it's successful, I should say.
And do you have results?
So to be determined, I'll say at this point. So we're still looking at kind of measuring the impact, the social and the economic one. But if that intervention is deemed successful, then hopefully that will be scaled. But also, I think that the model, in this case, a social impact bond, we talked about developing a market. So I think what we need to scale, what I see the need to scale, is these types of models. And by scaling them, we're building a market. So we need to scale them and therefore create understanding for them to be able to replicate it. Because also otherwise, an intervention like this may be provided by a service company that says we'll do an outcome-based payment model. Is never going to be picked up in any other municipality or by any other clients, because they don't understand the model of doing such.
Tove?
Yeah, I would just like to add a point on the scalability, and we've been focusing quite a lot on sort of how to integrate and system change within the public sector, and also want to highlight that the potential in also scaling outside of that system. Not saying that the other is not needed, but there are also quite a few challenges that we can address through working directly with individuals or with big corporates. For example, one of the businesses we've invested in are working to create more decent work situation in global supply chains, and then they're working with the brands and the suppliers to really create that effect, and using technology to reach the scale. And there are quite a few of those examples also, maybe not including the public sector to that same extent.
Yes. We have a question over here.
My name is Katarina Ringborg. I'm vice chair of the think tank Global Utmaning. I have a question regarding family offices. Family offices is a category of owner currently getting a lot of attention in the Swedish media. And experts say that this category of owner is increasing in importance. I would like to ask everyone in the panel, how do you look at that category of owners? What do they bring to the party that others don't? Thank you.
Okay, maybe Christopher, you would like to start?
Yeah, I think there's two parts which are important in that context. The first thing is what they put into the game direct, and the other one is the indirect one. So directly, they are normally entrepreneurs or based or founded by entrepreneurs, meaning that they normally have risk willingness, which is higher than other people. They understand that you need to take some risk to go somewhere, and that means there's normally a higher willingness to do that. But I think it's important not to forget that many of these foundations are normally backed by families, which are heavily involved in industries. And that means by educating the foundations, you get an indirect access to how the industry is working. And you also create a more kind of, going back to that, a more harmonized dialogue. You're basically creating a systemized approach. So I think that family offices are having a big role, both direct and indirect. And we, as financial experts, can learn a lot from them. That's the second part.
Anybody else want to pick up?
Family offices, foundations, high net worth individuals, they've really been in many markets the ones that have gotten started with impact investing, because they are less risk averse. They tend to be more focused on trying to address some of these types of issues. And so they've been willing to really take early risk in the industry. So they've really been pioneers in the market. So the rest of us are able to move ahead because of some of the early work some of these organizations have done.
Tove and
Yeah, I
Hugo.
can also agree. Like also from a Swedish and Nordic perspective, they're super important in building this market. So really appreciate that.
Yeah, and I think a combination of the entrepreneurship background, which is often true, and then the drive for sustainability. We're talking about a father or a grandfather, kind of managing assets for future generations. So there's definitely a very personal sustainability interest in this. I think those two combined together really also provides a belief in that perhaps society, and in that we put public, private, and other actors together through entrepreneurship and innovation can do a lot.
And then I think there's one last element put into that as well. That is, of course, that they have experience of successful businesses, meaning that they will make a requirement on the financial performance as well.
Right.
We have a question over here somewhere. Yeah, please.
Okay, hi. My name is Ylva Lundqvist Frid, and I work at the Swedish Mikrofonden Sverige. So we have we're mainly supported by cooperatives and NGOs, and so far we've given out micro credit guarantees to 70 social businesses. And our experience is that most of the social businesses, what they really want is a small, normal bank loan, which they cannot receive because the banks say no. So I have a question about risk, because one of our main partners is Ekobanken, which is a bank that only gives loans with a positive impact. And for the 20 years they've been existing, they never ever had a failed loan. And we also see that we have very low rate of failed payments. So I wonder, my impression is that the normal business banks misjudge the social entrepreneurs and think that it's a higher risk than it actually is. So my question is if you have any numbers showing like the risk factor of this sector.
I think this is a very interesting question. It's both about risk, but also I think about how sophisticated do these financial instruments really need to be. So please, who would like to?
Yeah, maybe I can start. I don't have the numbers on the risk, but something that could be worth mentioning here is that, I mean, entrepreneurship is really about solving problems, right? And the problems that these entrepreneurs are addressing are real problems. They're not, unfortunately, not going to disappear within the next year or two. So it's not like addressing a trend or something that's hot at the market right now. And that, to some extent, could indicate that the risk should be lower because it's going to solve a problem for a longer time horizon and with less fluctuations in terms of demand. So that's maybe something to feed into that discussion, but I don't have the numbers.
And I think also maybe add I think it depends on, where you put your definitions, and it goes back to impact, defining impact or not, impact washing or not. I think for some of the more structural fundamental problems, perhaps dealt with through structural models or through startup companies, there is perhaps more of a risk for failing because they need to be more innovative. They need to exist on a new market, if you like, which is maybe outcomes based or not, and that is perhaps not yet here. So I think also as an investor, if you're looking to do impact investment, but you're quite liberal with how you, quite careful perhaps, or liberal with how you define impact, I think you can probably guarantee 100% success rate in terms of the companies you pick. But I think if we as a market, as a country, and I think here back to Thomas's definition of we all have different mandates and incentives, but if we're looking at this as a way of creating sustainable finance for a country, for Sweden, you're not going to have a 100% success rate because it will involve some issues like integration, like education, like mental health, etc., where it's just not going to work. So I think it depends also where you put your mark. So who are you? What's your incentive? What's your mandate?
Okay, I would like just to finish off actually to ask all of you and I will leave the last word to you, Karen, but first from the other one, in order to make the Swedish impact investment market flourish even further, and going back to your imperatives, finance, innovation, data and policy, what do you think is mostly needed now on the Swedish market? Maybe you would like to start, Hugo?
Sure. I think I'll put my emphasis on policy and data, and I think the data point is obvious to everyone. If you're a bank or an institution, or if you're a private investor, or if you're the government, if you're going to put money into something, you want to be able, and we talk about impact, you want to be able to know that there are systems in place to demonstrate indicators and data impact, etc. But also going back to my previous point about the making sure the public sector is involved in creating and building this market. And I think perhaps there are, we're talking about impact investment, but there might be two slightly parallel markets. And again, because we have other people who are more experts than me on the sort of social entrepreneurship, on the structural side, or on the outcome side, I should say, I think there's a real need to kind of recognize that, yes, it's going to come with time, like Christopher said, but it's not. I think on the VC side, it's the market will take care of that and it will happen. I think on the structural outcome side, we need to be smart. We need to bring everyone together around the table, and we need to have, perhaps through a NAB or another body, we need to have a really concrete dialogue about how we do that.
So data and policy. And you, Tove?
Yeah, I'd like to make 2 points, and I think the first one is regarding the financial side, and one gap where we would love to see more players is in the early stage, but institutional investors that can take lead in the VC rounds. That's a place in that life cycle where we would love to see more players. And my second point would be around the data, to have a national or a Nordic or a global way to define the impact and measure that would help the whole sector a lot and make sure that the capital actually goes to the right things.
Christopher?
So I would say that the data, since data is taken, I would say policies is extremely important to have some kind of clarity about what is going to happen, so a timeline. Because as long as you don't know what policies is doing, it creates uncertainty, and as long as there's uncertainty, people will wait with investments. So that's one part. But there's one thing that's missing, and that's procurement. So every single one of us, every single municipality, every single government is having enormous power in respect to actually putting your orders. So the power of individuals and institutions in using procurement or orders to actually streamline the way that their suppliers are acting is extremely powerful. And we are seeing that. So we are benefiting on the back of being a Swedish bank, and we are benefiting on the back of doing green bonds. So we get access sometimes, but there's probably 95% of all public institutions, and even more private, doesn't look at the procurement as a power instrument. And I think that is missing here.
So the final concluding remark goes to you, Karen.
Great, thank you. And I'll just pick up on that. Actually, public procurement is one of the policy levers we have in the policy framework, exactly for the reasons that you mentioned. It's a very powerful one. So I would say that I think that the dialogue, the engagement, and the collaboration is probably the most important step at this moment in the market. There's so much activity and progress, and by bringing together the different stakeholders and including the public sector and working together to figure out how to move the market forward, I think that would be the most powerful thing that can be done here at the moment. And I would just add as well, I mean, obviously being able to develop more products that can engage investors and get them started along the journey.
So the innovation part in a way.
Yeah, and get them started along the journey of moving towards sustainable finance and impact.
Thank you so much. Thank you, Christopher, Karen, Tove, and Hugo, and you all.
I know that it's in the policy area.